spot silver continues to build its cup formation. It has not yet come to conclusion, but it will. I can absolutely 100% tell you it will. And the other thing that I will tell you, you go in with something like this, an SLV or any kind of intangible silver or intangible gold, that goes to zero. As the currency hyperinflates, it goes to zero. It does nothing for you. Can you see that in the physical world, that's what protects you? That's why wealth shields are made of this, not this. And I know a lot of people have bought gold and then they've been and silver and have been so disappointed because what they look at is Wall Street's spot market, which was created to manage your perception of the markets, and particularly when it comes to spot gold. Because spot gold, or gold rather, is the primary currency metal. Silver is the secondary currency metal. A rising spot price is an indication of a failing currency. This is the pattern that we're going to be looking for. It's not going to be smooth, but we want that cup pattern because it tells us the smart money's been accumulating. And by the way, who's the smart money in this case? How about the central banks, right? They've been accumulating a ton of gold. Okay, so we had the breakout, and then because a rising gold price is an indication of a failing currency, they have to create a whole lot more gold that doesn't exist in order to try and control the price. Why isn't it down at 600, right? That shows you how much buying pressure there is. I will also point out to you the volume on the exchange and how that volume has grown over time, right? But they don't want you to think of gold as a safe haven. They're accumulating it. They just don't want you to, because they like your wealth in a system that's easy for them to steal, and you don't even realize that they're stealing it, right? Your wealth and your work. You know, look on that purchasing power chart, and it has gone down since the day you were born. You can buy less and less with the same amount of money. Not true on gold or silver. That's protected your purchasing power, and it will protect your purchasing power into the future. Okay, so here we went up, and it should have gone up more, but you know, they don't want you to see that. So we've got a top here. It's trying to break out. What I find really interesting about this pattern is that this line should have been support, and it wasn't quite, but you still didn't get as big a correction as you should have, considering this line did not stop a further decline below it. But this top line, this resistance line here, now you got a triple top. 1, 2, 3. And what you also have, how do you know that this is in a bull market or a positive market? It's pretty simple. You have a series of higher and higher lows, because as long as you get higher and higher lows, you will get higher highs. It's the same thing with the purchasing power. How do you know it's in a negative trend? Because what you have are lower and lower highs. And if you keep getting lower and lower highs, guess what? You're going to end up with lower lows. So they just cover up the negative trend in the dollar's purchasing power, by pushing the stock market higher. And you go, oh my gosh, the stock market's going up. I don't want to miss out. Fear of missing out, FOMO. I don't want to miss out. But the reality is it's a misdirection. Look over here, because what we're really doing is over here, and we don't want you to see this, is an accumulation pattern of smart money. And you guys know, I do believe that you should always do for yourself what the smartest guys in the room are doing for themselves. And frankly, who knows more about what they're doing to the monetary system than the central banks? And what are they doing? They are buying more gold than they have since the last monetary system transition we went to. That should tell you a lot. If you're just counting on Wall Street to tell you the truth, you're not going to get it in the paper market. Because again, they can create as much silver that does not nor ever will exist as they want and suppress the price. But in the physical only market where you actually are spending money and buying it, you're paying a huge premium to that spot price. And it's purely based on supply and demand. It really is just that simple. But what you also can see is that spot silver continues to build its cup formation. It has not yet come to conclusion, but it will. I can't tell you exactly when, but I can absolutely 100% tell you it will. And the other thing that I will tell you is that it is in a long-term positive trend because, again, you have a consistent series of higher and higher lows. And again, physical silver to the spot commands a huge premium. And the mint, I'm telling you, what they're selling at the mint is frankly no different than what we're selling for $37.79 at this moment that I'm filming this. That could be different by the time you see it, and certainly by the time you call it in. And y'all know that I like silver for my barterable position. And this is the silver ETF, which just reflects SLV, which just reflects the spot price, right? The demand for silver may temporarily exceed available supply that is acceptable for delivery to the trust, which may adversely affect an investment in the shares. You think? Because now they don't have to have the silver underlying it. A sudden increase in demand for shares that temporarily exceed supply may result in price volatility of the shares. Oh, maybe like this area over here. So the reality is so simple. If you don't hold it, you don't own it, and your perception means squat in a court of law. Because what we 100% know, what we know absolutely, is that wealth shields are made of physical gold and physical silver in your possession. This, all counterparty risk. This, no counterparty risk. We are going into a battle royale. We are transitioning from one system into another system. You go in with something like this, an SLV or any kind of intangible silver or intangible gold, that goes to zero. As the currency hyperinflates, it goes to zero. It does nothing for you. Can you see that in the physical world, that's what protects you? That's why wealth shields are made of this.